This pullback was expected and should only be a mild one. Gary Glover is going to walk us through the reasons why it was expected in this year and how much he's looking for it to be just a small one, as well as which trading companies we're going to be looking at. Because if a market has a pullback like this, quite often the next market leaders can show right from the turnaround or before the market actually turns. So we'll have a look at that at the individual trading shares as well. Good morning, Gary. How are you?
I'm good, Chris.
You had you wrote your report on the weekend. We all got surprised with some tariffs, and then this morning we wake up and Mexico might have a month's extension, which who knows how long that could be extended for. So quite volatile times in a short amount. Is this something you've seen much in your trading career? This kind of politically induced volatility?
Not heaps of that, but I guess we've had a little bit of Trump before, so what's everyone calling it, Trump 2.0, but which I do like. But yeah, it's all actually I saw someone post this morning, might have been one of the guys, Mark Gardner, actually had a sort of like might have been the art of the deal, and then obviously some of the tactics that you use, entrepreneurs use to negotiate. It's like you're into 1, 2, 3, 4. It's like that's like it's like the blueprint of go out with a crazy, start with a crazy deal initially, and then negotiate basically in, and it's almost it's always laughable. The blueprint there, but quite laughable as well. I thought it was quite funny, like bang on the money, but also quite funny as well. So, yeah, I mean, it kind of a lot of it made no sense, Chris. To be honest with you, think about half of that, half of the US is vegetables, fruit, nuts, energy. Comes out of Mexico and Canada, so it's like, you're now going to make it between 10 to 25% more expensive for Americans to buy all those goods, groceries. I don't think so. I don't think that's what they're. Yeah, I didn't sign up for that. So, but yeah, I don't know. We'll see here. But yeah, I guess the only thing there for markets is you are gonna, it's funny because that's sort of like we talked about the post-election year and also the fifth year, how we get that. The first quarter of those years was quite volatile, and we actually see a lot of broadening patterns in the first quarter, but with weakness sort of rolling out to sort of March, April, like a lot of March, April lows there. So it was interesting there because you look through those fifth years, you look through those post-election years. Oftentimes they'll actually, in the start of the year, they actually go up, come off, they'll expand slightly to a new high, and then come off again. So it's like, where I was looking through all those cycles, I'm thinking, every time this market goes to a new high, you should probably short it. Every time it breaks down to a slight new low, probably buy it, because that's sort of like what had happened in the past cycles around this period. And that's exactly what we've seen here so far. So I say, technically, we've got our cap here. Like we know that those technical ranges there. The thing about those ranges, go back and square that 0709 bear market. All the key squaring the ranges have all basically acted as a ceiling for the market and kept the lid on the market for between at least 6 months minimum, and sometimes 12 months. And I think one case there might have been a 300% expansion, kept the market on the lid for about 2 years. But I think if we just if we sort of say this is going to be a 6-month lid here, which kind of makes sense, fits in the cycle a bit better, it's just going to keep the market under control there for a bit, act as a bit of a resistance, which so far we've had a couple of touches there. I think Dow's had 2 touches of 45. I think the S&P's had 2 here of 61.20, and the Nasdaq's had 3 touches of that 20,000 mark as well. So, so all those levels actually are acting as resistance here. So that's quite interesting. But yeah, so I think we'll get a bit of weakness there, Chris, but it doesn't sort of suggest any big declines either. So, and it does be quite choppy as well. So margin, new high, margin, new low. So yeah, so the good news is, we shouldn't see any big decline here, but bad news is that there should be a lid on this market here for a while. So we might just sort of see the market consolidate, sort of pull backwards. So kind of making it a little bit harder trading here, a bit volatile. So yeah, I mean, I've sort of got a few, got a small hedge on there, but and that's, yes, it's weird there. Obviously, I think we started the first trading day of the last 2 weeks with a bit of a whack. So yeah, just it's going to be a bit volatile here. But yeah, I think you just got to make sure you choose wisely here. Really, I think maybe trade a bit lighter here as well for a bit. But I can just see a period of consolidation ahead here. Just looking at all those indices, the fact that we've got some really key resistance points there. So the good news is I don't see any big corrections either. We typically don't see big pullbacks in those 50 years or in the post-election years. So we're just looking for like a, maybe like a slightly downward consolidation here. But yeah, it's interesting now. I think the big BIS looking forward there now is maybe, inflation. And then obviously go watch the employment numbers as we sort of highlighted in those, in the 2025 forecast. That's probably the big one that, if there's anything going to unravel the market, it's probably employment there. So as long as I think employment stays pretty firm here, market should be okay here. But yeah, I think inflation might sort of cause more of the jitters there. Obviously, you got Trump, who sort of just his normal activity is going to make the market volatile, but probably inflation as well. CPI is probably going to be one to keep an eye on.
All right, so that's a good overview of where we are in the markets. And as Gary mentioned, he went through the blueprint in great detail. What we've seen just here, while you didn't foresee Trump to come out with the tariffs, you were expecting to see resistance where we saw it on the US indices. You were expecting a bit of a pullback, but mild ones. So that's still sort of chugging along as planned. The ASX is just that one that's a little bit different. As you mentioned, commodities can be impacted to the US consumer and those borders with Canada and Mexico, the tariffs, whether the goods come across, China, an extra 10% as well. All this is on the negotiation table, even though it's announced. What about Australia? We don't need to go into specifics of whether we will or won't get tariffs. Our trade deficit seems to be erring in our favour. But from the technical perspective of the ASX, have you seen any changes or what's caught your eye this week with the ASX?
Yeah, no, look, I guess, I mean, the thing that stands out there, Chris, is a large broadening pattern. So we've had that little pullback there off the first October high and then expanded to a new high, then expanded to a new low, now expanded to a new high again. So we've got this broadening pattern, which is just right through, those first quarter years and stuff in the past there. So just, so as again, if you look at that there, we've, gone to a new marginal high, then we pulled back, then a new marginal low and gone back to the new, so that's probably telling us to be a little bit careful here. Maybe we'll pull back, maybe a new marginal low again here, but again, it's nothing to, not going to get any big moves here, I think. So it can be pretty choppy too. Those sort of, they don't always expand each time there. They can come back within the range as well, but just really choppy environment that first quarter here. So I still sort of view I still think we'll sort of March, April there, sort of, that's probably the window. And if I see a pull back into that window, I view that as probably, if that happens there, that might give us our best buy for the year. That's what I'm hoping here. But I think I just got to trade lightly here, I think, just in the short term here with all this noise going on. I was thinking about this morning, Chris, and I sort of woke up and said, there's lots of noise in the market right now. So I don't know, try and avoid the noise here and try and look at actually what price action is telling us here as well. So, are we seeing sort of strong volume or light volume here? Are we, if we see, are we seeing distribution days? Sort of, I think just got to look at the price action a little bit more closely than normal. Just, have a look and see what, whether we're getting signs of accumulation or signs of distribution for stocks there. Because I think, when there's so much noise going on like at the moment, it can kind of take you away from the basics, looking at closely. So look at the charts. And, so I think, that's where you can kind of make mistakes there when there's a lot of noise going on as well. So just Right, just focus on what's in front of us here.
That's good tip. Good tip indeed. And obviously something you've looked at a lot when trading markets. Something else that you've looked at in detail is when markets turn, you quite often look for companies that have already made a higher low and companies that have already trawled out a bottom, possibly when the market was topping or it had just started to turn down. These companies had already started to show, like you're going to show us, possibly false breaks, 0, 1, 2, 3 bottoms, some sort of structure that you look for before they turn and become leaders. So Domain Holdings Group, you've looked at this a couple of times before. You have mentioned that REA is definitely the outperformer, and the two charts seem to have gone in opposite directions. What's critical about DHG and what it's doing at the moment, and why is it in your shortlist in the context of what's happening in the markets?
Yeah, I mean, if you look at that, Chris, there as well from that, I mean, can't see the date there, but must be the 23 or end of 22 low there. See how that's basically sort of gone to a marginal new low. So it's just broken that previous low, but then marginal. So oftentimes when we get false breaks, marginal lows, and they don't follow through and they reverse there, and it gives us a target to go back and hit the last swing high. And so we should be looking at a marginally to go marginally above that, which is exactly what's occurred there. So now we've got a marginal new high. It's telling us, I wish it will go back to retest this low and go marginally below that October 22 low, which is exactly what's occurred again. And now we reverse. So we could, sometimes these broadening patterns can broaden right out here. So the only thing we're not seeing there is much volume so far in that move here. So, but they can sort of, considering this is a pretty nasty downtrend for quite a while here, we can sort of see that the selling's, the price action starting to drop. They even saw it towards the low there. I think there was a couple of weeks down there. We saw a little bit of volume, but definitely saw some pretty light volume throughout that whole period on that last sort of leg down. So, really only saw a little bit of volume at the low, which kind of be in that exhaustion, and then can be the place where people finally step in. So, not seeing big volume here so far, but we are seeing a little VCP just on the daily, sort of hovering around the 50 there. It's only a small one there, and sort of see just in there nice and tight here. So, I think if the price can actually get above this sort of 276 might be, that'll be an okay sign there. Sometimes they can start with low volume. We'd like to see a bit more volume. But yeah, definitely wanted to keep an eye on there just because it's the broadening nature of this. And yeah, it's, look, I think REA is on about 100 times and look, Domain's on about 40 times, which is still pretty expensive. So, but this is a momentum based market here. It's not doing a lot of logical things, the market. So yeah, plenty of stocks that don't have earnings growth trading on 20, 30 times earnings. And, and there's been lots of stocks that have actually come off pretty hard that are probably on pretty single digit PEs and yields that are maybe 7, 8, 9%, but they aren't getting any lower either. So, it's a fascinating period there, but if you study you go back and read about the 40s and 70s, it's not too dissimilar to what was going on through those periods there. Quite a bit of volatility there, some big moves, big ranges. So yeah, it can be a real trading sort of front there. So, but yeah, this is definitely one interesting there. Just like to see a bit more volume there come in, but yeah, price action's sort of holding in there, right?
All right. Well, another one in the group is KLS, so Kelsian Group, looking at the transport. You've covered Flight Centre, corporate travel a fair few times, looking at how they raised capital during the COVID period. Then we had that mass movement where everyone wanted to go on holidays. There was a huge boost for demand. Qantas has seen highest prices. KLS not in the same boat as Qantas as regards to the share price. It's way down here.
Yeah.
We're looking at false breaking scenario. What's happening here at the far right?
Yeah, I mean, we're sort of more than half from that 2023 high, and that's not even the high, it's just a lower high. So it's had a fair whack here. It's a big 50% decline in just in the last 18 months. But yeah, it's interesting here that we've actually gone to a new low. I've had a couple of touches there and haven't really, we've tried to go through the level a few times and didn't follow through. can see the volume really waned off there. We just started to see a little bit of volume come in the last few weeks. So maybe some signs of accumulation starting to come in. So definitely one maybe here. I'd probably like to see a little bit more, something a bit more constructive. So maybe see like a 0, 1, 2, 3, like a little bit of a base, or maybe see some sort of, a little bit of a bounce and then a consolidation, and maybe follow that consolidation out. So I haven't added this one here. I just think this is one on the radar just because it has false break here, and we have seen some volume on the moves there. So I'm just hoping we'll see maybe a little bit more basing pattern here, but definitely constructive there. I mean, it's pretty, okay, it is a bit of a high capex stock there, spending to maintain those sort of ferries and buses and stuff there. It's pretty capex heavy. So, but we are back to a pretty light PE here now, and in a market maybe shorter yield, there's a bit of, there's a bit of yield there at the moment as well. So, so potentially got a bit upside here. So, I think one that looks interesting. Yeah, probably not quite ready yet, but yeah, showing some hallmarks there.
Nice. Now, Aurora, very large company, international exposure. I haven't looked at where all of their manufacturing is, but no doubt there's a fair bit in North America. Packaging Group, so ORA. What is interesting here is these explosive movements that are no doubt some sort news related.
Yeah.
And then you've got in the chart, which helps highlight it for us, they seem to have just drifted in time and given up a little bit of price, but months and months to churn sideways after that explosive movement off the lows, and it seems to have really held. Investors seem to have been staying the price with ORA. So what do we look for here? How do we understand what's going on and where the opportunity is?
Yes, I mean, oftentimes these sort of like the early sort of start of a low there, if you get an impulsive move off the low and you see good volume, then you see some sort of consolidation now in lighter volume. That can be the makings of the first high low. That's what we sort of got here. Definitely, even the last 3 or 4 weeks there, been very, very light volume in the pullback there. So looking pretty constructive there. So for me, okay, this is like a bit of a VCP, a bit of a tightening pattern there. I would only be buying this if it broke above that last little swing high there, around that 250 mark, Chris, as well. So yeah, it's around there. So once we come out of there, because we've seen some of these VCPs, even the bigger names, once they crack that level, that's when they can go. But this one actually has broken down here yesterday, so it's gonna have to sort of do a bit more building here. Really, sort of, I like for them to stay in the top half, and now this is probably just broken just below the midpoint. So yeah, so it's gonna have to prove itself a bit longer here at the moment. So look, interesting one here, but yeah, I thought the pattern was looking pretty interesting, but the breakdowns probably took it off my radar a little bit. It's going to have to build a bit more, but it's still going to have to go through this sort of last swing high there, really. So I fear that might take a while here, having broken down a little bit. But that's the type of pattern we want to be looking for. We want to be looking for that, nice strong bounce, bit of a consolidation, a lot of, coming in hopefully a first high low, and then coming through the other side there. That's the ones that have been working here lately. So, yeah, this one here may not be one of those, but yeah, we'll just see here. Sort of seeing, if you're patient, they wait for that break. I'll come through. I think I've seen, I think Flight Center, I think Webjet, I think we saw Harvey Norman. We saw quite a few bigger cap names actually have that bounce, consolidation, and then break through that can then pop. So yeah. So those are the setups we're sort of looking for there.
And another one in the list, Propeller Funerals, PFP being the ticker. Obviously, the name says it all and what they do. You pad noted that it trades on a massive PE, 40 times what the company does. But it seems as though it's really been able to hold the course. So it had that rally, 420, getting up towards that $6, not quite the 620 mark. And it's just a similar thing to what we're looking at here, not as explosive in time, but it had the rally, and then it's been able to hold high in the range and actually edge higher. So how important is it that it's been edging higher and holding sort of not quite?
Yeah, I mean, look, you've seen here that the expensive stocks can keep getting more expensive. So yeah, you just got to keep that in mind here. I mean, the thing with Propel Funerals, if you think about I'm just trying to think of the last group, the last general operator there.
Invicare with it?
Invicare, yeah, I should know that because
I saw in your reports many times.
I had a lot of clients in there, but that stock had, it had multiple years of just growth. But at some stage, it got to around about 40% market share, or maybe just under 40%. And then I think ACCC said that's enough. And as soon as the growth was sort of like, you can't grow anymore, and the share price basically halved, because you sort of got a big multiple. So Propel Funeral is not a big multiple. It is growing, obviously acquiring other assets, still in a position to grow here, but at some point in the future, ACCC is probably going to say, hey, enough's enough. And then, yeah, but I don't think it's at that point yet, but it's as it grows, it will get close to that point. So there will be some risk here. So, but the short term here, I think still looks pretty positive. Looks like it's tightened up here. We've seen a lot of these stocks have a bit of a pause, tighten up, and then pop again. So, does look okay here, but this one does come with risk here because it is on that 40 times there. Can be a bit lightly traded to look through those volumes as well. But, it is a stock that has been growing, quite nicely. But is it worth 40 times? I probably would say no, but the cap-share ratio is around about 37, 38 at the moment, which is pretty high. And market's got some momentum behind it. So, yeah, so it's, all that risk management, Chris, as we know. So, yeah.
Definitely. And definitely understanding the large macro picture and how much the tailwinds are there to help propel the best trades and momentum trades. And Megaport One has been one of those solid performers that has caught the tailwinds and pushed on for exceptional growth, and then turned the corner and had some pretty heavy headwinds. So looking at the share price chart here, this is obviously the weekly, so you've got a couple of years of data. We've got lows under the $5 level. We've got highs over the $15 level, and that doesn't speak about the history to the left of the chart. So big moves, potential for massive gains. What's happening here on this chart?
Yeah, I mean, look, you've gone from what 16 under, to 7 here. So it's sort of pretty much 50% correction in price here. So we know our leading names, Chris, 80% of them have a 50% drop here. So we've now had that. It's just whether we can sort of build again. I do like the fact that we had a false break here, went to a new low, then reversed there. And then we did see some pretty strong volume and an impulsive move as well. So that daily, if you look at like 6 or 7 days straight up, they were pretty big volume. So it's pretty good rally there. And then we've sort of tightened up here, a little consolidation. So I thought here, if this consolidates here, tightens up here, could be one to have a look at there. Looks quite good there. I think it may have just pierced the top of that range again today here, which is sort of, so it's not really going to give us doesn't look like it's going to give us a low risk, tight little entry, but yeah, does look constructive there. I think it reports around 20th or 22nd of February, something like that. So, yeah, but yeah, price action looks encouraging here.
Very good. And if we were to see the blueprint unfold to what we've expected it to be, sort of the broadening top that we see through to March lows, March, April lows, possibly, if that unfolds, no doubt the market will turn back up at some point. You've told us that the fifth years tend to be the strongest year out of the decade. So don't be surprised if we see massive double-digit returns in this market. But the point I'm getting at here is we're going to need to find new leaders. And is this the kind of setup that you'd want to see before it hits a low, if we do see a March or April low, sort of edging higher before the market?
Yeah, it's not probably, obviously it hasn't been a stronger stock here, but it is now showing a first high low, and we've had a nice consolidation, and now we're breaking through. So yeah, so it does look quite positive in that regard. Probably the upside with this one, Chris, is that it's probably property heavy. So if we do start to get inflation coming back here, everyone knows that inflationary pressure is going to be long assets. So asset prices are going to so those sort of holding asset base as well, they're probably going to get revalued higher here. So I know everyone sort of thinks property is going to be weak, probably be negative, but if you think about, I had this discussion before, if in the 70s there, I think it was you had like 8 years where inflation averaged around about 7%. And you thought, okay, that's probably going to kill housing industries and stuff there. But if the cost to build a house goes up 7% every year, then the value of that house is not going to go down. It's going to go upwards. And it was the case. I think property averaged around 9.5% over those 8 years for that period. So look, you say inflation 7, the property's only 9.5, so you're making a 2.5 on inflation there, but everyone else is paying those exorbitant rents without the assets, and the assets are all going up in value. So this is why the rich get richer during high inflation periods. It's those who hold the most amount of assets are the ones who win in the end. Do those get further ahead? Because everyone else is really struggling to make ends meet, to save money here, because it's not good for everyone. Because you can definitely make more money in lower inflation environments. Everyone can, but what it does is separate even more for those with assets there. So that's why the property sector is interesting there. We're definitely seeing a feel that property trust sector start to sort of show some positivity in the last few weeks as well, Chris. I think CIP was the other one there that I quite like. It's just a feel that those dexes had a bit of a pop over range. So I feel the property trust actually looking kind of interesting again. So remember we had that little run there last time. So
well, we definitely saw that the 30-30. You noted there were a lot of property, and we both kind of rolled our eyes and said, "Property doesn't move that far." I was joking, we're up by a beta, and it just kept plowing.
Yeah, we had a really great run there. I actually traded a couple of names there. Like, one did okay. One, I think one was good, one was average. So, but yeah, there's an interesting sector here. Look, that's it's it is what it is. I guess I guess the other thing too is you're definitely seeing a lot more pressure. Like companies putting pressure on employees to come back in the office now. A lot of the productivity data coming out is, like initially in COVID, the productivity was pretty good. We were all working from home and still keeping up our hard work. But obviously a few years at home, maybe bad habits drift in. All the productivity data is definitely showing a fading of performance and things getting done. So you're starting to see firms there coming. I know still hard to find staff here, but if the economy tightens up and jobs tighten up, then employers will get the upper hand, then you're dragging stuff, and you're already seeing a lot of stuff. People are already anecdotally talking about the cities being a lot busier. A lot more people on the buses and trains, stuff there. So people getting called in an extra day. So that's going to be probably quite positive for property trusts moving forward if that's the case here. So definitely a sector to keep an eye on. Actually, sort of got me sort of looking at those, having a look through the sector there to sort of see there might be opportunities there.
Very good. Well, that is one to look at, because we have been surprised before to say, well, there's not really opportunities here, but good to hear your analysis of what the current macro looks like and also how it can just be a leading sector at times. So we've got Centuria, CIP. That's obviously the reason why industrial offices, that kind of exposure of what happens to the property. And look, I'll put you on the spot here because we do have a huge amount of news that comes through. Just quickly, you manage portfolios, you manage your own portfolio trading, momentum, client portfolios, positions. When you see rapid news like we've seen in the last 2 days in Australia based off what's happening in the US, how do you respond to this kind of knee-jerk reaction news? What do you do?
I think we're going to have a bit of a view on that as well, Chris, as well. So, that's why I sort of think, there's a lot of noise here. So just going to put that aside here, sort of think sort of sensibly. So, I look at the sort of cycles, I look at momentum and economy. I just think you just got to, be wise with you. I'm at the moment here, probably trading a bit lighter, probably, not jumping it too much here. I still think the market might drift back here. So, to me, looking at the sectors, I think will be interesting there, maybe trying to look the position in those. One thing we haven't seen as much gains in that sort of small to medium sort of sector. So I have been looking at some of the smaller cap, mid cap sort of, even LICs and sort of funds there, because rather than try and pick a single stock there, you're picking a fund there, that's sort of a way to look at it there, but not too many options in it, only really one or two half decent options. And I noticed today that that Jeff Wilson's got a founders LIC coming up there. So looking at those, the homework suggested that founder-led businesses tend to do well over the long run, which we sort of know. So there's a new LIC coming to market where they're just going to invest in founder-led businesses, which is kind of sounds interesting to me. That's sort of something like that might be sort of something. I think I'll probably let that price settle a little bit here. Maybe I'd like to pull back a little bit, but yeah, there's some businesses there. I think what you're trying to do is look at businesses that are going to come through the other side here, I guess. But then also look at price action as well. So, but I think it's just really important just to sort of try and not get caught up in the news. I think what happens with this noise is that the noise overloads everything else, and then you stop doing what you normally do, and the noise overrides, and then you look back in a month's time and 2 months' time and go, oh, look, the charts were, they're showing weakness, they were showing distribution, or they're showing accumulation, or whatever they were showing. The price action was telling us something, but all the noise was actually, distracting us from what's laid in front of us. So I think you sort of got to put it all together there as well. I mean, if inflation is going to, I think all the rate traders are saying inflation is going to come back here, and you see what Trump's doing is going to cause inflation as well. That understanding what happens asset classes around that is kind of important as well. And then I do quite like the commodity area. I mean, so far haven't seen too much strength in a lot of the commodities. I mean, we've had a bit of a bounce in energy, but most of the other commodities have been weak there, apart from gold being pretty buoyant. Most of the others there, and even the gold stocks really haven't sort of tore it apart, considering where the dollar is as well. Because in Aussie gold terms, they're probably making as much money as they've ever made. So sort of last night, obviously gold and coffee. If you like your coffee, it's not good. It's bad news there, because that's prices are going to go up, unfortunately, because your sort of gold and coffee both hit all-time highest price ever last night. So just that's putting pressure on commodities there. History tells us there that those soft commodities there, as much as that sounds all pretty bullish, hard to find companies that you can profit from in the soft area. Whereas the metals is a lot cleaner, easier to trade on those. So that's probably where I'm looking at there. So there's a couple of softs I'm looking at. One in particular there that I'm looking at, but yeah, we'll watch those. But there hasn't been a lot of money made in that sort of soft area, particularly in equities in the past. So it's a bit of a tricky one. I know everyone sort of said we should be investing in food there, but
it's hard to get the right exposures with it.
Pretty game to investing, yeah. But yeah.
Well, that's some pretty solid insights. And if I can summarize that, it sounds as though in this sort of rapid news noise scenario, you look back at the foundations of your trading, which is looking at cycles, understanding sort of your blueprint, understanding the sectors, and then within the sectors, looking at the leaders, understanding that price volume analysis like you always do. And this is something that I've observed of Gary, where it was the COVID market. He picked that exceptionally well with the highs and the lows and the timings. And I remember seeing reports of his from the GFC era where he was looking for a much larger prediction than what most were really looking for, and that came through. And we know, looking back and studying through the Great Depression and also other periods in market cycles, the tech rack and so on, there have been markers within the charts and within the price action that Gary's talking about that have really been the hallmarks to say, well, actually, if you just paid attention to it, it was there. Is that the kind of thing that William O'Neill would summarize and say he saw that as well, Gary?
Yeah, definitely. I mean, if you study those 40s and 70s periods as well, you look at some of the ranges that those indices and stocks trade were just phenomenal. And there were some massive moves in those periods. And you looked at it and go back and just like a lot of it doesn't make sense. But 2 or 3 years into this high inflation environment, there's a lot of these moves don't make sense. What we've seen. We're seeing that there's some stocks here on 100, 200 times levels, and they still kept going up. You got banks with no earnings on, 15, 20, 25, 28 times earnings. That you just won't, you wouldn't have seen that in the last 20, 30 years. But these high inflation environments, they do throw up things you don't normally see. And it sounds, I've always loved charts here, but I would say right now, understanding technical analysis and charts has probably never been more important to actually trading the market here, because this is a momentum-based market here. So, and we're seeing here like stocks that are, stocks that look cheap here and low PEs and high yields there. They look like they're outstanding buys here, but they've got downward momentum. They've just kept going lower here. It's like, wow, this thing's like on a P at 6 or 8, and the yield's like 9, 10, 11%. Doesn't make sense there. But then you got other stocks that are on 20 times and yields of 2 or 3%, and they got no earnings, and they go to 25 times, 28 times, 30 times, going to 60 times, and you go, wow. There's still not even, there's a lot of companies that aren't even actually at break even, still losing money and massive, but it's a really momentum based market here. So it's a real trend trading market here. So I think, that's why, looking at the charts here, really important. What's the price action telling us here? So block all the noise out, because the noise, there's a lot of noise here doesn't, is throwing up opportunities there, but like a lot of it isn't making a lot of sense in the market. And a lot of the moves aren't making sense, but we just sort of follow price action there, and then try and sort of think about what sectors did in the past in these sort of crazy times. So learn from the past a little bit. That can give us a few opportunities there. But yeah, it's not an easy environment here, but it's but I think technical analysis there has probably been never more important.
I think that's a good point to end on. Solid one. And we'll put a link on the screen to your blueprint for 2025 for anyone who wants to recap and review that, and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.